What's up, ladies and gents? Okay, I am back in the office. My computer's still not fixed. It's getting fixed right now. I try to figure out how to boot it from a USB drive. I've been through a lot of trouble trying to fix this thing up. Finally making some progress. We'll see if the new install will happen. In the meantime, oh, this looks weird. This is live in progress fixing of PC. I don't know what happened. I think the memory somehow blew out, or the computer thought the memory blew out. I'm not exactly sure. I'm gonna have to see if I can restore some of these options. But I'm going to bed soon, so I wanted to make this video before I go to bed. I had some thoughts for Monday. So for Monday, let me place you somewhere where I can actually stabilize the phone here. So I know that gold's been skyrocketing, and all these other like quote unquote, non-financial assets have been doing pretty well. But what I'm thinking is, of course, the classic retail buy to dip mentality kicking in my brain. So I've been trying to figure out how I can, what kind of bets I can make there. And I was thinking First Republic, but I was trying to dig into First Republic and I couldn't find enough information that I think would help me make some better decisions. And I don't understand the bank well enough. So instead, I went back to a bank that I did do some homework on, and that's US Bank. Now, US Bank is one that got hit about 10% today, or not today, but on Friday. And I've been looking over it a little bit over the weekend here, especially earlier today. I spent about an hour doing homework. And so I was looking at their balance sheet. And so their balance sheet consists of, just like any other bank that's kind of in trouble right now, it's got a lot of long-term treasuries. Actually, not as many as you might think. Most of it's mortgage-backed securities, actually. But one thing that I was trying to figure out is, out of their whole entire portfolio, what was their entry price? And the way you determine the entry price, if you're me, is you look at their reported average yield on their securities, and it's about 2%. So that means they're pretty underwater, because short-term treasuries right now, 2-year treasuries and things like that, they yield 4 or over percent. So they're not doing very well with the investments they do have, but they've only got half of their investments, are about $88 billion, marked under hold till maturity, or HTM. So what that means is basically you can't touch the assets until they mature, which is, their most used time frame is anywhere between 5 to 10 years. So they hold, 2-year, 5-year, but mostly 10-year treasuries, it seems like, and maybe a few 30-year treasuries. And so half of that is liquidatable. I'm sorry, half of their assets are liquidatable, so another 88 or so $billion worth of assets, and the mix is essentially the same. Most of it is mortgage-backed securities, and a portion, like maybe 10% or something, is treasuries. So I don't think that the bank is going to be in trouble at all. I mean, they might suffer some losses. They might suffer permanent impairment on the ability to return the same amount that they have been historically. So the bank might take a haircut of like 30, 40, 50%, maybe even, but it will survive. I don't think that the bank is going to have any problems, surviving this kind of like banking crisis over here. So I'm thinking Monday, if USB drops another 10% like it did on Friday, I'm thinking of going in, because I know what the bank consists of. I know that it's not going to fail. And even if it has permanent impairment, I think that it is likely to recover over time. Not only that, and I quite frankly, I don't think they're going to lose deposits either. I don't think they'll have the same problem as some of the more Silicon Valley oriented banks that have already seen losses and have gone under due to regulators taking them down or what have you. So US Bank is going to be my personal bet. Now, I would encourage all of you to do your own due diligence and homework and research a bank in and out, inside and out. If you're trying to make a bet, I wouldn't ever copy anyone's trades personally, but obviously that's all you. You're, taking responsibility for your own trades. So if it does drop, I may even just sell a put on US Bank. I may activate that leverage that I've been working so diligently to remove my margin. So I'm going to probably access some more margin and sell puts on US Bank. The ticker for that is USB, I believe. So, oh, no, my computer. Okay, still alive. It wants me to restore apps from my last PC. So I'm still working on that. So that's why my face is blue. It's got this weird blue background. I'm working, guys. I'm doing it. Multitasking here. Recording videos as I am trying to fix this PC. By the way, I'm not tech savvy at all. Don't be coming at me with like blue screen recommendations and how to fix this, how to fix that. Everything I'm doing is I'm trying to like watch YouTube videos and follow instructions, which I'm not that good at. So it's not my specialty. But anyway, USB, probably sell puts or buy the equity outright, especially if I see like a little bottoming during the day on Monday, which I think is a trade day. I keep on getting caught by holidays and all that. Let me see if there's a calendar available here. No, okay. So anyways, that's the play. Let me know what you're trying to accomplish over the next coming week, whether you're going to play the banks, whether you're going in on KRE. I already have 50 shares of KRE, and they're about down maybe 7%. And I do think though that KRE will be fine, but it will also have permanent impairment because the banks that are taken out of the index and gone to zero will be replaced, and that the loss will be forever there. So you can't expect KRE to bounce right back to previous levels. It's not going to do that. So it's going to take some time. And just because of the mechanics of how it works. So if you think it's going to be like a snapback, like, pandemic lows, March lows type of snapback, it's not going to happen in these banks. The only way we may have something like that happen is if there's some kind of a craze and maybe, the Fed lowers everything down to zero again, and there's, more money infusion into the system. By the way, there has been a ton of money infusion into the system. The Fed, basically opened up the lending window, their kind of emergency, like liquidity window, or desk or whatever you want to call it. Basically a pathway for banks to get temporary or permanent liquidity injections. What that's going to allow them to do is to basically, it's like a pawn shop, right? So they put their assets as collateral for short-term borrowing. And so they're able to meet their short-term obligations to people like their depositors. So that's, I don't think there's going to be any more big bank failures, at least in the US here. I don't know about anything international. And I mean, I might be wrong, of course. There could be some other bank that's in trouble right now and things are unwinding. But as far as a systemic risk, I think they're going to be working very diligently to stave that off. They meaning, the bankers, the Fed, etc., the whole system. I've seen so far that some of the major players like Goldman Sachs, JP Morgan, State Street and all that, they've been injecting liquidity in banks like First Republic Bank and other banks that like to save. So it seems to me that to the big players, stability and confidence is more important than, short-term, diligent, like money, asset allocation. So they're trying to basically, slap concrete on leaks. And I don't know if it's working. So far, it seems to be kind of working, but only time will tell whether their emergency measures of the banking cartel is able to, deal with the problem that rates have been reversed, more or less. Short-term rates have been higher for long-term rates than long-term rates for quite some time now, and that's causing all kinds of chaos, in the banks, because to operate a bank, basically you need to borrow short and lend long. That's what banks do. And so if they're not able to do what banks do, there's trouble. Normally the yield goes back to regular shape, meaning short-term rates are lower than long-term rates, which would make sense. And, kind of like, I don't know, inflation environment or something, whatever environment that there's, asset allocators think is beneficial. So in then that environment, banks make money. In the other environment, they can't make money, at least easily. They would have to lend at much higher rates. And the safest lending is the U.S. Treasuries, and that's why they keep buying them, but they're lower than short-term cash. So now they're going to need to find credit-worthy borrowers that are willing to pay like over 5, 6, 7, 8, 9, 10%. And those are very hard to find. The businesses that are able to sustain those kind of loans are almost non-existent. They've got, obviously you got small businesses, but medium to large size businesses are not going to willing to pay those kind of rates. So I don't know what's going to happen. Maybe they're going to have to go into maybe they'll just start buying corporate bond ETFs or something like that. I don't really know, but maybe that's a good trade. Maybe it's a good trade. Looking at corporate bonds ETFs and guessing that this is going to be like the new pristine collateral that banks are going to be holding in their sheets, in their balance sheets, because that would in effect improve their spread, right? They'd be able to borrow at 5 and lend at 7, 8, or 9, or 10 with very little risk. And so that could happen. I'm making a prediction right now. That could happen. But either way, I'm going to be looking at U.S. Bank. I may not pull the trigger on Monday. I'll do some homework, maybe look at some other banks that have been hit and see if I can find some value there. If you do know a bank, or if you think that there's some bank that's worth its salt, please, leave a comment, let me know, and I'll tell you what I think, and maybe I can follow your trade, or at least figure out if it's right for me. All right, I'm gonna end it right there. I'm gonna continue to fix my computer and go to bed because it's almost 12 and I'm getting tired. Got a long day. All right, peace out.